Australian shares have been modestly higher over the last few months, and our portfolios have performed nicely with this backdrop. Our position in Asian shares has been our strongest performer, whilst gold has hurt the portfolios to a lesser extent. It is hard to find a market that is not at or near record highs, and investors might be asking whether things are getting a tad overheated. For example, the cryptocurrency universe has pushed the total value of Bitcoin to over $1 trillion. I'm showing a price chart of Bitcoin here since the year 2015 until today. Crypto traders have found some extra room in their pockets to push the value of Dogecoin to $7 billion. That's right, Dogecoin is now worth $7 billion, which is more than Qantas or Origin Energy. When you start hearing things like this, people rightly ask if things are getting a tad overheated. So, where to from here? As always, investors should be looking at earnings, interest rates and risk as the guide for the next big move in equity markets. Earnings are strong, as shown by this chart, and the momentum is supporting high equity prices. Interest rates and quantitative easing has played such a large part in driving the stock market rally that investors need to be mindful that this might end at some point. The first point to make is that central banks will move interest rates to foster full employment and stable prices. So when we look at this, we can see that employment, as shown by the blue line, is rapidly approaching full employment targets in the USA. Inflation is shown in red, which is tracking below the inflation targets by the black line. Bottom line here is that the music is still playing. In other words, equity markets are not about to be strangled by a higher interest rate environment. But that's something investors need to monitor closely because this backdrop is extremely fluid. And that's something we can talk about more in a future video update.